Hello, I'm Jeffrey Ham, equity analyst for Briefing.com. Today is Monday, November 10th. Stocks fell Monday as concerns regarding financial companies and automakers overshadowed news of a massive Chinese fiscal stimulus and a restructuring of AIG's government bailout. The S&P 500 opened 2.3% higher as overseas markets rallied on the Chinese fiscal stimulus plan, but gave up those gains as the financial sector faltered. In the end, the S&P 500 fell a little more than 1% in below-average volume, with 8 of the 10 economic sectors posting a loss. China will spend $586 billion, equal to approximately 18% of its GDP, in a plan to support its domestic economy and restore global economic health. The two-year package will target a broad range of industries, including housing, infrastructure, and healthcare. In corporate news, AIG rose 8% on word its bailout from the U.S. government has been amended, including an expansion in aid to $150 billion from $123 billion and better loan terms. The move is meant to give AIG more time to sell assets after losing $24.5 billion in the third quarter, and stands to reassure investors that the insurance giant will be able to satisfy its counterparty obligations. Despite the strength in AIG, the financial sector dropped nearly 4.5%, with notable weakness in Goldman Sachs. Goldman had its fourth quarter earnings estimate cut to a loss of $2.50 per share from a profit of $2.71 per share at Barclays. General Motors dropped to its lowest level in 6 decades after it was downgraded to sell from hold and had its price target cut to $0 from $4 at Deutsche Bank. GM may not be able to fund its U.S. operations beyond December without government intervention, Deutsche Bank said. The financial market turmoil and slowdown in consumer spending is taking its toll on retailers. Circuit City filed for Chapter 11 bankruptcy protection due to stiff competition and financial market disruptions that limited the retailer's access to credit. UPS and FedEx gained on news that they will have less competition in the U.S. starting early next year. DHL U.S. Express said it will discontinue domestic-only air and ground services to only focus on international offerings. The shipping company will also cut 9,500 U.S. jobs on top of the 5,400 jobs it has already eliminated. In commodity trading, oil surged as high as 7.4% and gold gained as much as 4.7% as traders speculated that the Chinese stimulus plan would spark increased demand. Commodities gave up much of those gains by the end of the session, however, with oil settling up just about 2% to a little more than $62 per barrel, and gold advancing a little more than 1.5% to $746. I'm Jeffrey Ham for Briefing.com, and thanks for listening.